Hi, this is Charles Kelly, Money Tips. Great to see you all again. Thanks for tuning in, for the likes and the shares. I really appreciate it. And thanks for those who also come along to my webinars. That's great as well. Well, I want to give you some, well, it's bad news really, but it's also may open up opportunities for you. So it might be some good news. And that is that interest rates will rise, property prices will continue falling, but opportunities will open up for property buyers, first-time buyers, investors, and so on. Now, the Bank of England and the Federal Reserve have hinted and kind of made it clear that rates rises are on the cards. I think the Fed said they're not going to reduce rates this year, or certainly for the foreseeable future. This is in response to the market saying we need a rate reduction to boost the economy, and the Bank of England are more or less the same. And you know, I think it's inevitable that we're going to see maybe one next month, maybe you see a small rate rise, maybe another one after that before rates start coming down towards the end of the year. So if you're looking at fixed rates, you want to talk to your broker and say, well, is this a good time to fix? Should I wait a while? What should I do? It's quite a big decision. But definitely wholesale money market rates, the rates at which banks lend to each other, like for instance, the LIBOR, the SONIAs are up in the 5%. So it's pointing towards a rate rise there. Inflation in the UK is currently at 10.1%, so it seems to be stubborn. It's fixing itself at a higher rate. And we know that food inflation is officially at over 17%, but I believe it's much more. I mean, I've just been to the shops today, like eggs. I don't know what's going on with eggs. There's either nothing left, or they're £3 a box, where I used to pay about £1.30, £1.40. Now they're £3 a box. Well, that's not 17%, that's double. And that's just one example. That's a staple kind of thing in your diet. But I don't know what's going on with eggs. You go there and the shelves are bare. It's like some panic on. In fact, one supermarket told me, I said, why is there no eggs here? He said, well, as soon as we put them on the shelf, the local restaurants and all come and buy them all. I thought they buy from wholesale. Anyway, that's another subject. But inflation's at 10%. Now, the Bank of England's target rate is 2%. I'm going to put a photo of this up as well so you can see. They have a target inflation rate of 2%. So the inflation is now 5 times the target rate. Now, the target rate is ridiculous, really. I mean, why don't they set a target rate of 5 or 6% to start with and then come down? No, they're going for a target rate. So no wonder they're putting up rates. What do you think they're going to do if their method for bringing down inflation is higher interest rates? That's their blunt instrument. The only thing to bring down the inflation that they caused, right, is higher interest rates. And the inflation is at 10% and they want to bring it down to 2%. What do you think they're going to do? It's obvious they're going to keep increasing rates or keep them higher. You know, so there is going to be some pain. Now, I've hinted there that they've caused this inflation. I believe, in my own opinion and what I've read, that inflation is not caused by this Ukraine war. That's helped. That's poured oil on the fires, but it was brewing for quite a while. It's been brewing since 2008 when they printed all this money. This new term come out called quantitative easing, which is basically creating money out of thin air. And then again, in the last few years, they've just printed billions and trillions of dollars, pounds and euros, and that's what's caused inflation. If you look back to the Roman times when they had the silver coins and they didn't have enough silver, they started to water down the value of the silver in those coins. They started to put cheaper elements in the coin rather than silver. Well, of course, now the money that we've got is not backed by anything. It's just, you know, it's just pieces of worthless metal, and the paper money is not backed by gold or any precious metals. But that brought down or led to the downfall of the Roman Empire, inflation and all that sort of stuff, the worthlessness of money. And every one of these currencies, if you look back over history, have always eventually failed. Croesus is another one. I've heard that person as rich as Croesus. He controlled the money in his day, you know, thousands of years ago. So most of these things have come to an end after a certain amount of time, maybe 100 years, 50 years or whatever. And we could see this happening to the dollar because they've just inflated the value. It's a bit like the publican watering down the beer. I mean, I'm going to give you a funny demonstration. This is a washing up liquid, right? Now, if I want to create more washing up liquid and I just fill that up with water, yeah, I've got a whole bottle of washing up liquid rather than half. But is it the same? No, it's watered down. It's not as much value. It won't wash your stuff as much as the concentrated washing up liquid does, right? It's devaluing it. And it's the same with a pound. It's the same with a dollar. If you keep printing more of it and it's just going out there, it devalues it. Another example could be a company. If you own a limited company and you've got 100 shares and there's £100 in the company, that's £1 per share. Great. So if someone holds a share, they've got £1 of that share. But if the company then goes and issues more shares and issues 1,000 shares, and there's still the same amount of money in the company, then what? That share is then only worth 10p. So I know it might sound a bit complicated, but I believe that the Bank of England have caused this, and now we are suffering through inflation, through the loss of our savings, through seeing our savings devalue and the money devaluing by 10% a year. We are the ones suffering. Do you think, the Bank of England care that they are officially driving us into recession? In America and here, we're going to be driven into what they call official recession. A lot of people say, well, we're already in recession, aren't we? The economy's not growing that much, and they're fiddling the figures anyway. So I believe that we're going to see a recession. This will drive demand down for things, for goods and services. It will drive demand down for property and for the stock market as well. And I think we are going to see towards the end of this year, as people react to higher interest rates and they come out of mortgages and remortgages and try and remortgage at a higher interest rate, maybe it just won't be worth it. Maybe some will lose their properties altogether, because if their payments have doubled, they can't keep up with it. We know that the mortgages agreed are going down, that even the remortgages agreed are going down, despite the fact that every year people have to, a certain hundreds of thousands of people have to remortgage for a new rate every month. So what's going to happen? Now, do these people at the Bank of England care? What do you think? Do you think they care? Do you think Andrew Bailey gives a damn about the average person? He's the governor of the Bank of England. But there was a furious reaction from one of the Bank of England chiefs called Hugh Pill. That's Hugh, H-U-W, Pill. Hugh is a Welsh name. It's a Welsh variation on H-U-G-H. Hugh Pill said, Britons, right, he's saying, you need to accept that you are poorer. And I took a photo of this, and I'm going to put it up on the screen a while. You need to accept that you are poorer. That's what he said. I took a photo of it. I couldn't believe it. Britons must accept they are worse off and stop asking for more pay, a Bank of England chief says. Now, do you know what this guy earns? Do you know how much this guy earns? £190,000. He lives in a £1.5 million home in London, in a very trendy part of Bayswater. He's got a nice little mews house. I would say that house is probably worth more like 2 million. 190,000 a year. And he's telling us, oh, you must accept you're poorer. The Bank of England Governor, Andrew Bailey, is on over £500,000 a year. And they're telling us what to do. And they cause this problem. They are the architects of this inflation. Why? I don't know. It was to prop up the economy, prop up the banks, make sure that the economy didn't go into recession. If they'd allowed the economy to go in recession, I think we'd be coming out of it by now and coming out stronger. So that's my rant about these people that tell us what to do. Do as I say, not as I do. You can suffer. You're just the plebs. You're just the peasants. We will sit here on our thrones in the Bank of England, barely done a day's work in our lives, never run a business, never suffered and tried to build up a business and deal with all the problems you have with running a business, like higher electricity, like all the other problems that we've got. No, they just sit there and pontificate and tell us that we need to accept that we are poorer. Well, I'm not going to accept that I'm poorer. I'm going to get through this, and I want to show you how you can get through it as well. Now, another thing about property, just before I come on to that, is a RICS report, RICS, Royal Institute of Chartered Surveyors. They carry out nearly all the surveys on behalf of lenders, right? So they go out, when you go for a mortgage and the lender says you need a survey report, valuation, it's a RICS surveyor, someone with that qualification, a RICS surveyor that will carry out the valuation. They're like the trusted people, like a lawyer, or the body that they belong to is like a trusted professional body, like accountants. You have the chartered accountants, lawyers, you have the solicitors regulation. Well, this is the equivalent of surveyor. So you can't just get any guy turn up and say, yeah, I think this is worth $500,000, or yeah, I see there's a crack. I think there might be a crack there. I don't know. So the RICs are trained to do this. They go through a lot of qualifications. Now they've said they're predicting a fall in the market price of properties by around 5%. We know that demand is going down. Home buyers, inquiries, sales. The only point that's going up, in fact, is first-time buyers. More first-time buyers are getting on the market in response to lower prices. They're now suddenly able to buy with the lower prices. Obviously, rents are going up through the roof, as I reported previously. So maybe it's that tipping point where you might be just cheaper buying than renting, although in some parts of the country that's not the case. Okay, so they're predicting a fall, but I think there are opportunities now for first-time buyers and property investors as prices come down to more reasonable levels. This is not a question of being, you're waiting to swoop like a vulture. This is a question of, if you're an investor, you want to find value in the property that you're buying. I went to see a property in London yesterday, and frankly, it was okay. It needed a bit of money spent on it, but the figures don't add up. If you look at the higher interest rates on the mortgage that you'd obtain as a buy-to-let, it just doesn't add up. It's just not viable. I won't go through the whole details of the deal, but of course, when you're looking at rates at 2 and 3%, yes, it would. Yeah, you've got a profit there. You can make some money on that, but not when the rates are 5, maybe 6%. If you're buying in a limited company, for instance. So it just didn't add up, and that's what's happening with a lot of investors. They're saying, well, this deal doesn't, it's not wiping its feet. It doesn't add up. So just watch out for that. But if prices come down and maybe rates come down at the end of the year, we might see a better market for investors. I know that prices are coming down because I get agents saying, we've reduced the price of this flat, we've reduced this price. I see properties hanging around on the market for longer than they should be, unlike a couple of years ago when people are queuing up to buy properties. Now, what do you think the big boys are doing? The hedge funds, the investment banks and all these sorts of things, they're buying property. Blackstone in America have just raised $30 billion to buy property. They've raised this money through the markets, maybe through a bond issue, which I'd love to be able to issue bonds and say, I'm going to issue this £10 million bond. You give me your money and I'll pay you, 4 or 5% on the interest. Great, or 2% or 3%, depending on who you are. No, they've raised this money and they're looking to buy properties. Maybe they're looking for the bargains in the market. So, property is still a safe investment. What do they used to say? Safe as, remember that expression? Safe as houses, right? Property. People need somewhere to live. Population is still going up. More divorces, more properties needed. All these sorts of things. People living longer. All these dynamics come into play, meaning that property will always be, in the long run, a sound investment. Maybe in the short term, you've got to be careful if you're going into something where you're planning to buy something and flip it. Yeah, can you? I don't know. The time you pay for stamp duty and all the rest of it, is it worth it? Buy, refurbish. Yeah, you can add value to a property. Buy, refurbish, and then refinance to keep it for a perpetual income. Get your money out and you've got a perpetual income. These are all good ideas. I teach this in some of my training courses as well. But look, what I want to ask you is, what is your biggest money worry? What is your biggest money worry? Now, Americans were asked this who'd retired in a couple of years ago. They did a survey of retired Americans, and their biggest worry was not dying, was not ill health. It was running out of money, because a lot of people are short on their pensions. They haven't got quite enough pensions in their pension pot. Maybe the income they're on is more fixed and the prices are going up. So a lot of people are worried, and we do live in challenging times, as we've just discussed. But through training, through money management and education, you can learn to not only survive a recession, but thrive in a recession. You can learn how to build wealth, to get control of your finances and build wealth for the future. So to help you do this, I'm running a webinar. It'll be on Wednesday night, next Wednesday, called 3 Steps to Success Money Management. And I want to take you to the next level. I want to help you, first of all, get control of your finances, then help you build wealth over time by making the right choices, the right investments, and thirdly, to maintain that consistency with the help of maybe some coaching or whatever, but to maintain that consistency. So join me there. It'll be Wednesday, 8 p.m. Register in the link below. It's absolutely free. It won't be waffle. I'll give you a lot of good content there. So do join me. And yeah, we are in challenging times. I mean, there's another bank in trouble in America, and I think that we're going to see more banks failing, more of these smaller banks failing, and maybe that the Federal Reserve refusing to bail them out. You know that in the UK, you get financial compensation scheme. You might have had one of these letters from your bank. It says you're guaranteed 85,000 per depositor per bank. So if you've got more than 85,000 in the bank, in one particular bank, you're only covered by this compensation scheme if the bank fails up to 85,000. Now, interestingly, the Bank of England want to raise this. The Federal Reserve's figure is 250,000. Bank of England want to raise this. I wonder why they suddenly said this. They want to raise this compensation level higher and let the banks pay for that. I've also read something that they may be changing the way they bail out people. They might be changing it, and instead of giving you cash, they'll give you shares in the bank. But I don't know if that's true. I've just read something about that. It might be unsubstantiated. Anyway, I think that we're going to see a lot of more problems ahead. Big supermarket chains, Tesco's and Sainsbury's, announced a fall in profits, even though they've increased sales. Now, this is funny. They said, yes, we've had a fall in profits because we've tried to help our customers by charging them less prices, help them through these tough times. Yeah, right. They've been overcharging us for decades, and they've only had to reduce their prices because of competition like Aldi and Lidl coming in and Poundland undercutting them, which meant they had to cut their prices. I'm going to get my washing up liquid for stuff like this. You can buy this now in Poundland for 50p or 2 for £1. The supermarkets used to charge £2 or £3 for that. So come on, pull the other one, as they say. It's got bells on. They're suffering because of competition. Yeah, they may have had higher costs as well. But believe me, things are tough out there. It's a cutthroat market. So you've got to shop around and get the best deals for you. Don't necessarily rely on loyalty to one particular bank or supermarket or brand. You've got to really shop around to get the best deal for you. So there you go. Join me for my money management webinar next Wednesday, 8 p.m. and I will see you there for some great content and learn something, maybe help you, maybe turn your life around. This could be the turning point for you, just the fact that you've seen this video today. Thanks a lot. This is Charles Kelly Money Tips. I will see you in the very near future. Thank you.